I'm Scott Humphrey, CEO of the World Floor Covering Association. Thank you for joining us for our latest update on everything going on with the coronavirus COVID-19. Please make sure you're utilizing the tools that we have available for you. You'll look down below and notice that we have a Q&A section and a chat. If any question that comes up during the course of the presentation today, you can use either of those boxes, and I will take that information and relay it to the appropriate party that needs to answer it. Today, we'll be having Steve Abernathy with us. I'll introduce Steve a little bit more in a moment, and Jeff King. But before we get into them, I just want to give you an update of what's going on with the WFCA. We have had a dramatic increase in membership since January 1st, probably about sevenfold. I think our current membership for primary members is about 7,300. And so we're doing everything we can to not simply have you as members, but to engage you. We want your membership to matter. And that's the reason that every week we've made sure we've had something pertinent for you, whether it's an update on what's going on with coronavirus, like what we're doing today on forgiveness on the PPP loans, or what we're calling our retail rock stars, where we have retailers from across the United States sharing their best practices with you. Our intention is to continue to communicate with you in multiple ways, but to utilize these Zoom conferences as a way of connecting with you. The length of our seminar today will be about an hour, and if we need to stay a little bit longer, we're always willing to do that so that you can ask live questions of our subject matter experts, again, Steve and Jeff. Just a few things that WFCA has been doing I want to remind you of. If you've been on with us before, you're familiar with this, so I'll breeze through it. We have updated our website so that it has everything you would want to know about what's going on with the coronavirus legislation, how it impacts you, state guidelines and regulations. Everything you could need is right there. Just go to WFCA.org, click on the Coronavirus Resources tab, and that takes you to all of that information. Jeff has answered probably hundreds, maybe even more than that, of questions from individual members who have asked information specific to the PPP, to other SBA loans. All of that information we put in a Q&A section that's available to you. So please feel free to go there and utilize that. Generally, if you have questions, those questions are already answered by his responses to somebody else. So we thank you again for being with us. Just one quick reminder, our free university membership will go off at the end of this month, at the end of June. You've got 2 more weeks. We hope you take advantage of that. If you're not using it, use it, use it as a trial to see if it's something you like, and then we'll resume the regular paid use of the online university on July 1. So again, reminding you to take advantage of what's available to you, as we have tried to make that something that you can utilize in your downtime while you might be self-isolated or working from home. All right, let's get going into this. Steve Abernathy, I want to just share with you, first of all, I've asked Steve to give some insight to what's going on in the financial markets. Steve does not give financial advice. Please don't lean on him for that. He's simply giving his insight and his knowledge. He really follows this. I respect him personally in that regard. He is the CFO of the World Floor Covering Association. He is also the interim director of the Floor Covering Education Foundation. You've heard us speak of that before. So Steve is going to share with you a little bit of insight on financials. And Steve, when you're finished, I'll take the time to introduce Jeff.
Great. Thank you, Scott. I'm going to turn my video off because it helps a little bit on the internet connection that I have. Welcome, everyone. Good afternoon or good morning, depending on where you are. Thanks for joining us again, as Scott said. I'm going to give just a brief overview and update really from the prior presentations that we did on where we stand from a market perspective. Also look at unemployment. I'm going to take a quick dive into that and what's transpired since our last meeting, and then also an outlook, sort of the outlook that the Federal Reserve gave earlier this week, yesterday, I believe it was, on Wednesday, of where do they think economic activity is going to go over the next 12 to 24 months or so. So I'm going to begin, if you would, Lewis, put the slides up. I'll begin with just a quick market perspective, kind of where we've come from since the COVID-19 epidemic started, or pandemic started. We, of course, crashed just about in the market early on there for the first few weeks. We were down, down to the 18,500 level on the Dow Jones Industrial Average from a peak of almost 30,000. So a really, really steep decline. It was the fastest 30% plus decline that we'd ever seen. Well, interestingly enough, we have rebounded in the fastest way that we've also ever seen. Been just a remarkable rebound, a retracement off of that low in the decline from our peak. We, in fact, on the Dow have retraced 82 7.5% of the decline that we saw from the peak in the Dow. The S&P 500 has gained 87% of its loss back. And the NASDAQ, in fact, has regained new all-time highs. Just an extraordinary rebound in the financial markets. The volatility index, which is measured by what's called the VIX, reached a height of about 85, a little over 85 at the very, very height of the decline. It has now retreated to less than 24. The higher the number there, the more volatile the markets are. The lower number, the more stable they are in terms of volatility. However, that gain back in the market has put valuations now way back up at extremes. If you look at forward PEs, price to earnings ratios with companies, they are very much stretched and probably at extremes at this point. And that's pretty well, sort of self-evident from the fact that the markets are almost back to where they were before the decline occurred. And company earnings are expected in the second, third, and fourth quarter to truly decline significantly. So we are stretched in terms of valuation on the market from my perspective, at least my opinion on that is. And as Scott said, I don't give investment advice at all, but it doesn't take a rocket scientist to see that the market has really soared back up and probably is at least due for a correction. We're seeing that actually today. The market's down some 1,500 points on the Dow, some 5.5% as of just a few minutes ago. So the market has really come back down today, but again, we're still way up from where we were at the low. Next slide, if you would, Lewis. This slide is really just a picture of the Dow. It's a chart of the Dow through actually early this morning. You'll notice that far right side where the Dow is really gapped down at the open this morning. But you can see how that we came off the lows and almost regained the highs that we had earlier in the year. And so that is an extraordinary gain in that short of a period of time. I just want to show you that graphically and let you see how that looks. Next slide. I'm going to look at the jobless situation. I know that it's a pretty important thing for all of us is what's going on in the job market. As you know, we had just huge job losses in the last several months in the United States, particularly. And the new claims, which are first-time claims being filed, they shot up, and I'll show you a chart of that next, but then they've been declining. They were only 1.5 million last week. And now that is a very high number, don't get me wrong, but it's nowhere near as high as it had been in prior weeks. In fact, it has been falling for 10 straight consecutive weeks. And of course, that is likely being impacted by the receipts that business are getting over the PPP loans. That it was designed to, provide a buffer to the layoffs. And certainly I believe it has done that. And that is being reflected in the declining first-time claims. And also the reopening activity we're starting to see some of that across many of the states, and that is helping some of the numbers, and the claims are sort of coming down somewhat from where they were at the peak. If you look at continuing claims, they were at 20.9 million people. That means there were 20.9, almost 21 million people still on the unemployment rolls, and add in the 1.5 million new ones. So you're really looking at closer to 22, 23 million people that are currently getting unemployment insurance. And if you look at that from a 12-week total, from say the last 12 weeks when this thing kind of really began, there's been a total of 44.2 million unemployment claims filed with the unemployment office. So just a staggering amount of folks that applied for unemployment insurance. Look at the next slide, if you would, Lewis. I'll show you this in perspective historically. The initial claims, this is the initial claims number. So this is a week-by-week initial claims number. If you look at the all the way back to 2008 in the Great Recession, you can see that number never got even close to 1 million a week. Not even close to that. You're looking at 500,000-600,000 at most during the financial crisis of 2008, 2009. When you look on the right side of that chart, you see 2020, you see a massive jump. We had almost 7 million their initial claims, as you can see at the peak of that. But if you look at the smaller chart in between that, you'll see the weekly claims in the last 10 weeks, you'll see that declining. That yellow bar represents last week, and it declined again last week. So we are seeing some improvement. I guess what we're seeing is not job ads. What we're seeing is a lessening of the job losses, and hopefully that will continue. It'll still remains to be seen when the PPP dollars run out. Of course, Jeff's going to talk about that a little bit later, what happens after that. Next chart, if you would, Lewis. This is the chart of the continuing claims, and this is not first time, but continuing claims. And you can see we hit a peak of about 25 million continuing claims on a weekly basis. And that number has come down some. It's still way above 20. As I said, it's about 20.9 million claims as of last week. Dwarfs all prior history on that number. So we are still not out of the woods yet. We are still significantly and historically seeing unemployed at a rate that we've never had seen before. Last slide is I'll kind of give you a little bit of an outlook going forward of what the Federal Reserve published yesterday, I believe it was. They published a forecast. They do this periodically, I think roughly every 6 months at least. It's been 6 months since the last one. They publish an outlook for the next several months, and I just wanted to recap some of their outlook of what they see going forward. The Federal Reserve sees GDP contraction, that's gross domestic product contraction, of 6.5% for the year 2020, the year we're in. Total, that'd be a total year, 6.5% decline in GDP. However, they see it rebounding in 2021 and forecast a 5% expansion in 2021. Again, these are just forecasts from the Federal Reserve. They also signaled, in fact, committed, is the way it appeared, that they would have no significant rate increase, hold those rates near zero through 2022. That's unprecedented statements, again, from the Federal Reserve. So they are very accommodative. They are also pushing more stimulus. And the Treasury Secretary is talking about more stimulus. Congress is talking about more stimulus. We will see how that transpires over the next several weeks, but I do probably expect that we will see another round of that at some point. Their outlook for unemployment is that it would decline to 9.3% by year end from where we're at May of 13.3%. So they're still seeing us at nearly 10%, 9 to 10%, even through year end 2020. So still a challenging environment. The market was really anticipating more of a V-shaped rebound. Whether it continues to improve at that rapid pace is yet to be seen. But at least we stabilized here, and the market has certainly responded to some positive numbers, although be it today is negatively impacted by several things that are going on. One of which I think is the Federal Reserve statement in their outlook, and the second being the concerns over the second wave, if you would, of the coronavirus. So we'll see how things go. But that's sort of the perspective and outlook of what I see in the markets at this point.
Steve, thank you. Man, I would just say that if the market was a river, I would not want to be whitewater rafting on it.
Well, that's true. I wouldn't either.
Down and up and down. It's amazing how emotionally people respond now to the market. I know you and I have had a lot of discussions on it, so thanks for giving us an update on that. And if any questions come up through the rest of this, then I'll throw that back to you. Jeff King is on next. You guys know Jeff by now. He's probably the most known person in the flooring industry. He's certainly been one of the busiest with the rest of our team, working with our lobbying firm, Lobbying in Washington, D.C., not only to help craft and to tweak legislation, but certainly to help you understand legislation once it's been passed. Just as a disclaimer, I want to make sure that you're aware that Jeff is not licensed to practice, obviously, in all 50 states or in Canada, but he does have this uncanny knack for deciphering what comes out of D.C. into a language that's kind of applicable to us so that we can understand it and know how to act on it. We offer his advice as an overview and to generate conversations between you and your professional guidance team. So I hope that's how you use it. Again, if you have any questions during Jeff's presentation, simply use the chat button or the Q&A button below, and I'll throw those questions to him at the end. Jeff, you're on, buddy.
Thanks, Scott. I'm going to throw a question to Steve that he can answer once we get to question and answer, but I'd like him to address, we seem to be in a market that is driven by both a recession and a suppression of our markets by COVID. And I'm wondering if he has any insights or has heard much about how much of this is recession and how far are we are we getting close to getting out of the recession portion of this, and how much of this market change has been the suppression of our market through the shelter-in-place orders, et cetera. So with that, let me start talking about the most recent law that came into effect, the Paycheck Protection Flexibility Act. And let us just go through it. I want to discuss a number of items here. Trying to see if I get control of this. Come on. It's not working, Lewis. What's going on?
Is that Jeff? You want Lewis just to? There you go.
I got it now. What we're going to talk about is the new Flexibility Act primarily. We'll talk about some other issues as well. And I want to talk about the major changes in the forgiveness requirements is what that act approached on. The concept of a new forgiveness application. And there are a number of open issues that remain. I may have you take this over. There it goes. Here are the major changes that we've seen. And we'll go through each of them with some detail, but the extension of the forgiveness period to 24 weeks out of the 8 weeks, a change of the 75% to a 60% rule, the maintaining of the number of full-time employee equivalents, requiring you that you maintain wages or salaries within 25% of what they were before the virus caused so many problems. The term of the loan, delayed payment, and some tax deferral information that had some major issues on it. The extension of forgiveness period to the 24 weeks. Unfortunately, it's a little late for many of you. Many of you got your loans early. Your first 8 weeks are already done. The good news, if you haven't spent all the money, you're now going to have almost inevitably going to be able to spend all of it this time and get 100% forgiveness. The loan is now effective for 24 weeks or December 31st, whichever comes first. The reality is you'll never reach the 21st, December 31st issue anyway because of some other aspects to it. However, you can still elect to use the covered 8-week period. And my advice on that is going to be use the 8 weeks if it's better for you calculating the full-time employees and salary/wage retention. And we'll go through some of those in a little more detail. But what you want to do is that if you can get 100% forgiven now with the basic data you have now, do it. There's no reason not to get to forgiveness immediately. If you can't get it 100% forgiven, then obviously you want to wait to see if you can get better numbers. The 75% rule to the 60% rule, as you know, there was no 75% rule in the original bill, the CARES Act, that created the PPP program. But the Small Business Administration said, well, the primary purpose of this payroll protection program is to pay people. And therefore, we're going to mandate 75% of it be used on payroll costs. Congress, to their wisdom, agreed that, yes, part of it was to ensure payroll continuation, but they also recognized it doesn't much matter if you continue it for 8 weeks or even 24 weeks if the business at the end of it can't survive. So they wanted to give a greater portion of it to be used for the survival of business. And it also gives some opportunities to reduce staff in a way, which we'll talk about some more, and maintain your business at a lower level for a longer period of time, the full 24 weeks. There was some initial confusion on partial forgiveness. As you know, under the small business rule, if you were under 75%, then the amount forgiven was proportionally lower. The law, when we first saw it, we were a little concerned because it said you only got forgiveness if 60% of the loan was used for payroll costs. That meant if you used 59% of it, you didn't get anything forgiven. And we were very concerned. We have approached Congress about that. We had anticipated it might have been fixed in the Senate, which everybody thought it would be done. But because of the need to get the bill passed without changes and have it done immediately, and the need to have this done, the Senate passed the bill unanimously exactly as it was written. by the House without this correction. But the SBA, the Department of Transportation, has clarified it, made it very clear that it is still a proportionate system. So if you have 30% of it used on payroll, you'll only get half your loan forgiven. But if you have 60% of it, 59% of it, you'll get 99% of the loan approximately forgiven. So it's still now in the sliding scale. And that's a very important aspect. We were aware this change was going to probably take place. We were a little concerned when the Senate passed it as is, but we were assured by both all the senators as well as the House folks and leadership that no, this was not going to be read that way. The next is the number of full-time employee equivalents. And full-time employee equivalents means all your full-time employees and then your part-time employees added together until they make a full-time employee. And if it doesn't make a full-time employee, then each part-time employee, if you have one part-time employee, they'll count it as 0.5 of a full-time employee. And what they said is that you had to compare the full-time employees over 8 weeks, 8-week period, the old rule did, to the average you had between February 15th to June 30th of last year, or February 1 to February 29th of this year. Okay? They also had a safe harbor. The safe harbor was if you had the same number of FTEs that you had on February 15th and you had that on June 30th, then that was enough to satisfy the number. So even if you didn't average the full number during the 8 weeks, so long as by June 30th, you had the same number you had as of February 15th, then it wouldn't be cause any reduction in the amount of loan being forgiven. The new rule makes some very big changes in this. First of all, you're not required to count employees if you cannot rehire them or replace them. You've offered them a job and they said no. And we know that's been a problem for some of our members, so this is a pretty big deal. Or you can't hire them back because of safety restrictions that are imposed. And a good example is that here where I live, you can only have, your store can only be capacitated at 50%. Many of our people are practicing significant social distancing, restricting how many people can be in their store at any given time. And because of that, you may not need as many salespeople. You may have realized that you're going to require you don't want too many people in your warehouse, so you've staggered some of their shifts, but you've also reduced that number. If because of the social distancing requirements and the other restrictions, etc., you can't hire enough people back to make your FTTs, and so long as you can document show that, then you're going to be fine. We're waiting for SBA guidance on this. I will tell you now, I'm certain what they're going to require is some documentation. So if you tried to hire somebody and they said no, document it. Whether that's an email saying, I just want to confirm you're not coming back to work at this time. You've been offered your job back and you're not coming back. That's enough documentation. Show that, have a list of the people you tried to hire or any kind of advertisements you did to do so. Remember, there's also the safe harbor rule. Remember before you looked at it, how did the number of full-time employees you have on February 15th compared to how many you had on June 30th? Well, now they give you that time all the way to December 31. So by the time you hit December 31, if you have all the same numbers you had in February, then there's no reduction in your loan forgiveness because you've gotten back to the full number of full-time employees equivalents that you wanted to have. Now, you also know you have to maintain salaries and wages. And the rule was that you couldn't lower anybody's salary or wages on the average more than 25%. And so they originally compared what the average levels were on June 15th to the average over the 8 weeks. Or again, you had this deadline of June 30th to look at. So if the average wages you were paying as of June 30th were the same as within 25% of what you were paying on February 15th, you were safe. Well, they've moved that date to the 20th. The problem is now the average, though, if you're going to look at it not by the date, but by the time, it's now 24 weeks. And that creates a bigger issue for you all. You can, for those of you who already had figured this all out and have abided by all the rules, and you've used your loan correctly and you could get it immediately forgiven, by using the 8 weeks, use the 8 weeks. Clearly go for your phone loan forgiveness if you can get 100% forgiven now and you don't need the extra time, the extra 16 weeks to figure out finishing how much you paid for. The term of the loan. The CARES Act said that the maximum term, and that's their phrase, maximum term of the loan was 10 years. The Small Business Administration said 2 years. Well, the new law says a minimum of 5 years. However, they recognize many of these loans were written with a 2-year term, and they didn't want to automatically rewrite all these loans that had been already negotiated with your bank. So they said the 5-year minimum only applies to loans that were issued after the enactment of this bill, which the president signed on June 5th. But the law also allows you to negotiate with your lender for a longer period of time. And I think they're encouraging the lenders to do that. So if you have a loan before June 5th, the vast majority of you will have those, and you need a longer term to pay this off, again, at 1%, you know, you get a 5-year loan at 1%, that's a pretty good deal. Then I would go ahead and negotiate with your bank and try to get the longer term. But again, if you use the 24 weeks, you may actually get it all forgiven anyway based upon the new mathematics of it. The payroll protection plan also allowed, paycheck protection plan also allowed a deferred payment time. The CARES Act said it was 6 months to a year. The SBA said 6 months. The new law says a year, but they kind of made it odd. The time you pay is when the loan forgiveness is determined. So once they figured how much of the loan is to be forgiven, you have to start paying on the remaining amount, okay? But, or it's 10 months after the covered period ends, the 24 weeks, or if you want to use the 8 weeks, the 8 weeks end. That's when you have to now pay the loan, start paying on the loan. So you're going to assume your loan ends in 24 weeks. You have 10 months within which to file that application for forgiveness. Once it's determined how much still remains on the loan, that's when you start making monthly payments, okay? But it also puts a little input on that. You must apply for the forgiveness within 10 months now. And again, as I told you, apply when you meet your FTE, salary and wage requirements, and the 60-40% rules. When you can get 100% of it forgiven, you might as well go ahead and apply for it then. That would be my high recommendation. Do the math and figure it out. Tax deferral. The original CARES Act said employment taxes for 2020, that's your share of the Social Security tax, the 6.2%. You didn't have to deposit or pay into for 2020. 50% of it would have been due by December 31, 2021, and the other 50% would be due by the end of the year 2022. So you got to keep the 6.2% of your share of the payroll taxes, and you got to retain it for now. And ultimately didn't have to pay it. Without it, there's no interest on anything until these 2 dates. The IRS ruled that if you had received a PPP loan, you couldn't get it. You couldn't get this deferral. Well, the new act now says, yes, you can. Whether you got a PPP loan or not, the 6.2% you can retain for the entire 2020 year, and you don't have to start paying it until the end of 2021, half of it then and the other half in 2022. Please move, sweet pea. The new loan forgiveness application, many of you have already seen this application, the old application. It's now obsolete, and it is very complicated. It clearly was written taking, this SBA must have taken notes from the IRS to figure out how to make this the most complex and unreadable form you've ever seen. Because you have to go from table A to table B to this part of table A to that part of table A, then back up to the forgiveness application. It's really quite complex. There is a new application expected soon. I checked just before we got on this about an hour and a half ago and had not seen it come out yet. It's very important they put it out quickly, in all honesty, because it tells you what you have to do to get full forgiveness. It really helps you figure that out. Be aware the lenders can use their own form. and they can do anything they want. If you've already received the form, ask your lender if it's going to be updated, whether it's their form or the SBA form. Ask them right when you get off this phone call within the next few days, if you're already looking at forgiveness issues, call them up and say, you're going to give us a new form based upon the new law. So that I would do immediately. Open issues. There's a lot of confusion about the law. Senator Johnson mandated that he didn't want any more new loans being given out after June 30th, 2020. And so if you read the law, that seems to be what the new Flexibility Act allows. However, as you recall, there were 2 rounds of money given into the loan. And the first was the CARES Act, as you may recall. And that said that the loans, the covered period, if you give out the loans, was up until June 30th, 2020. The second round actually said the covered period was to December 31, 2020. The only money left to give away is from the second grouping. It's about $90 billion that's left to be given away. And so there's an argument and an issue of whether you can get your loan after June 30th, 2020. We're looking into that. We're on the Hill about it, trying to get this clarified. And we will keep you advised of all those aspects to it. The second big issue is people earning $100,000 or more. As any of you have looked at the loan application for forgiveness, it basically says you can't make more than $15,000 plus some dollars. I'd have to look at the actual number. I forget the calculation, but it's basically $100,000 divided by 52, then multiplied by 8. So it's 8 weeks of average of 8 weeks of $152,000. So it's somewhere about 15,700 some bucks. Okay. However, you now have 24 weeks to pay that loan. Does that mean you get to give yourself that to basically, I think it's about $7,900 a month, $7,800 a month every 4 weeks? Do you get to do that now instead of for 2 payroll periods, 2 8-week, 4-week periods? You get to do it for 6. And that raises a lot of concerns. It appears that's how it's written. But if you've got a small loan, and we have this issue with one of our members, we talked to him about it. They got a loan, and both he and his spouse make over $100,000 a year out of their store, and they had 6 employees. Okay, since they've gone back on work, they continue to pay themselves, but they only brought back 1 warehouse person and 1 salesperson. So under those circumstances, generally, they would get about $31,000 off of theirs out of a loan that was $100,000, close to $100,000, a little over $100,000. And then only the little bit they pay those 2 employees. So they'd still be in a hole about $50,000. That was the rate. The question now is, if they get the full 24 weeks, they can take the whole $100,000 and pay themselves with it during that time period. And that's been an issue. We're trying to get clarification on it. We believe as it's written, that it's allowed. And particularly because, remember, this Flexibility Act was not designed just to get employees paid, as the original portion was, but to also ensure that these businesses remain operational until this suppressed economy from the pandemic eases. So there's still an issue of non-deductibility of the expenses paid with the PPP loan. The IRS has ruled that there's no taxable income for getting it. So again, whatever your loan was, if you got $100,000 or $1.5 million, there's no income. It's not income to you. But you also don't get deductions for any of the expenses you use to pay for it. We've talked about that because it kind of reduces the value of the loan in some ways. So those of you in a high income state, that could actually mean you don't get to deduct, you didn't pay any for this money, but it also only gave you half of the money based upon your tax rates. So we're looking at that as well. Some other open issues that we have now resolved: bonuses. The SBA has ruled that you can include payroll cost, can be included payroll costs. So if you pay bonuses, for those of you who are very close to getting to the 60% and just want to be done with this, you can pay a bonus in your last payroll to get to the full 60%, and you are free to go to get your loan forgiven, assuming all the other aspects are met. There was also a question that CARE Act said you only got to deduct the expenses that were incurred and paid. Well, the SBA has ruled it either incurred or paid. So if you paid it during the period but it was incurred prior to that, you can use it. If it was incurred during the period but paid by the next regular billing date, you can include that as well. So they've not made clear whether you could get three. In other words, if you have, it basically covers 8 weeks, a little under 2 months, could I get 3 months worth of my utilities thrown in there? It looks like you might be able to, and it's not been clarified either. And we're still asking for advances on that. Advance payment of covered expenses. Mortgages, you can't pay, you only get your interest deduction, so you can't prepay it. But there's nothing said about prepayment about rent and utilities. In order to get to that 40% goal, in order to get it fully forgiven, or to give yourself some flexibility. That may help you do that. It's not been clarified whether that's covered, but it certainly appears to be, and there's many lawyers and accountants saying, yes, you can make advance payment on these 2 items. I just want to make sure that everybody knew that the SBA has issued rules on the timing of forgiveness. The lender has 60 days to make its recommendation of how much of the loan should be forgiven, and the SBA has 90 days after they receive that recommendation on it. And finally, unrelated to the Payroll Protection Program, there are openings safely. I want to let you know that OSHA and CDC are constantly updating their rules. And there are also new state requirements on what you can open. Some of them are construction, some of them retail. You need to keep up on this stuff. We will continue to update our rules as well. And I'm probably going to do a whole new set of how to open safely over the next few weeks. But there are also multiple state requirements, both in many states, that you need to look at as well. A lot of them address both retail and construction, so be aware of those. I saw something yesterday that the Architect Association has given a virtual drawing of how new retail space should be looked at in the time of the coronavirus, and it's kind of interesting. And you can just go to AIA website and you can actually look at what they're talking about. And with that, I guess we're going to start opening up to questions and answers.
Yeah, and Jeff, we have quite a few guys. I'll just remind you that this whole webinar today is being recorded, so you'll have access to this on WFCA.org. Not only the audio portion of this, but also the PowerPoints as well. So some of your questions will be answered through there. I'll be jumping back and forth between the Q&A tab and the chat tab, but if you have other questions that come up, please utilize one of the two. We'll make sure we cover them today. First question, Jeff. This particular person received $7,000 from an SBA advance, then $15,000 from an EIDL loan. We then got the $79,000 PPP loan for payroll. Is it true that you can only have a certain amount of forgiveness in total? And if so, what is that number?
When you figure out how much can be forgiven, you've already gotten a free $7,000. So that doesn't count as a loan. That's a pure grant.
Oh, that SBA advance is a pure grant.
SBA is a pure grant. So when you figure out your loan, you have to take that $7,000 out of it. So as I understand the rules is now written, you would be able to forgive $52,000 of that amount would be forgiven. The other $7,000 has already been forgiven as the grant, as a part of your EIDL application.
So Jeff, does the forgiveness apply to the EIDL as well?
No, the EIDL is a straight loan.
Okay.
Now, the one thing you could do is you could take if you qualify, get full $72,000 forgiven and pay back the other $7,000. In all honesty, I would take the $7,000 and apply it to the the emergency injury disaster loan portion, and lower that, to $8,000. And the reason is because that carries a higher interest rate. So while you'll have 2 loans, one will be at 1%, and the other one is probably somewhere about 3.5%.
Yeah, so Jeff, you probably answered this, but she added on a separate part of that. It says, do I need to ask for forgiveness of the PPP loan and the $7,000 emergency advance and the $15,000 EID all together, or do I ask for that forgiveness separately?
No, but the $7,000 should automatically be forgiven. The 15,000, assuming it's in addition to the 7, is what the EIDL loan is, and that's just a regular loan. You have whatever the term of that loan is. Again, I don't know. It's your bank's going to determine some of that in the SBA, but it's probably somewhere around 3.5%. It's somewhere in that range, 3.75%. So what you're going to do when you fill out the form, you're going to fill out all the information. But one of the items on that form is going to be, did you get an EIDL advance that was forgiven? And that is that 7,000. And you have to list that down. But you don't owe the 7,000 back at all. That's just gone.
Okay. All right. A couple of questions from over on the chat side. Terry Murphy asked, what about Safe Harbor where an FTE terminated for cause on March 4th, 2020? How does that impact?
The SBA, prior to the Flexibility Act, said, and I don't know if the flexibility is going to affect this, but they said if somebody quits, that doesn't count towards your FTE.
Okay.
So if somebody's quitting, then you don't have to include them in that number. It's they're gone because they want it to be gone.
It doesn't matter.
They had already said that if you can't rehire people, they refuse to come back so long as you document it. They weren't going to count them anyway. So that's just a follow-up on the idea. Well, okay, well, if they don't want to come back, what if somebody comes back and then quits? What do I do with them? Do I have to replace them? The new law says that you're supposed to try to bring them back, and if you can't or can't find a substitute. So I don't know if that's going to get affected by the new law, and I don't want to mislead you, but as the rules are currently written, then you don't count them in your FTE.
Yeah, and so you've heard Jeff say this. I'll say it again. Much of what happens in DC is fluid even after it's voted on. That's why you have continuing clarification from the SBA and from legislation at the House and Senate of what should be included. And so understand, as we get new updates, we're always giving those to you. I want to follow up with a different question from Terry. It says, if we switch from the 8 weeks of the loan to the 24 weeks to use the PPP funds, does that mean we have to maintain the full-time employee count for all 24 weeks? He said there's a lot of uncertainty regarding the future viability of business activity, so maintaining FTE headcount for an extra 16 weeks is very indeterminate.
Well, the answer is it's a little more complicated for you. The answer, if you go to the 24 weeks, which is fine, they're going to look at two things. One is your average FTEs during the 24 weeks, as you noted, minus those that you couldn't keep because of either government restrictions, a loss of business, or you couldn't hire people. You couldn't get, people didn't want to work and they didn't come back to work, and you couldn't find substitutes for them. Or you're going to look at your date in December 31 and say, how many people do I have there compared to February 15th? So those are the two options you have. So going to the 24 weeks will allow you to have more time to do it, but it also adds that slight risk of FTEs. But the rules are getting so loose on FTEs, I think you're going to find yourself able to kind of manipulate it. But just keep records of everything. So you don't hire the people back because of lower business. Part of that is because you can't get people into your store. And you don't need as many salespeople if you have lower business, or the fact is you're not allowing your store to be occupied. You're doing by appointment only or restricted number of people in there. You're not going to let more than so many people in, all those kinds of things. Just keep a record of that so you can show the reason I didn't hit the FTEs prior that I had as of February 15th is because of these factors. And those are, so I don't have to count them.
Hey, Jeff, Claudia asked, can you spend more than 75%, which is now 60% of the PPP, on salaries and wages and a lower percentage on utilities to rent? In other words, is that 60% a minimum, or can you spend more on salaries and wages and a lower percentage on utilities, rent, et cetera?
You can spend 100% on wages, and it's forgiven, provided they feel you make all the other mandates that you have. You don't. So, but a good example would be, a small company that has a spouse themselves in a company, they each made, I'm going to use some easy number, $100,000. And so they got a loan based upon that, which would have been about a little over $41,000. Okay. Well, if they had to pay it only over the 12-week period, the 8-week period, they would have gotten forgiven about 31 of that. And so they'd still have they'd still have $10,000. But now that there's 24 weeks of it, they'll get the whole thing forgiven. So yes, you can. And that's very important for sole proprietors or for these companies that are just there's 3 or 4 of you in the family working, these smaller companies that are family owned, because they'll be able to use the entire thing on, and you don't have to keep all the records of all your rents and all that stuff.
Jeff, there was some confusion early on. This is not one of the questions I have here that at least I don't think anyone's asked it, but there was some confusion early on that anyone who applied for a PPP loan of less than $2 million, it would be automatically forgiven.
No. What'll happen is there's 2 things that'll happen. Anything over $2 million under forgiveness review will be automatically audited. So they're going to audit your numbers, okay? Anything under that, it's hit and miss whether you get audited. What's more important, though, is that, as you know, when you applied for the loan, you had to certify that you were applying for the loan because out of financial need, that your company was suffering and needed this loan in order to continue in the business or survive. Any loan under $2 million, that certification will be deemed correct. They're not going to review that. The SBA is not going to review it. Technically, Department of Labor, Department of Treasury, the IRS, those folks, they could review it and claim that you lied. So there's always that minor risk. I think at a loan under $2 million, that's fairly remote. And given the amount of loans that are over $2 million, the fact that you're going to get audited is quite remote. It's more how you fill out that form. So the loan is not deemed automatically forgiven. What it is that your certification is deemed automatically correct, and you're unlikely to get audited.
Okay. I'm going to go back to Terry Murphy here. He says, I read somewhere that federal taxes paid by employers cannot apply to the cost included in the 60% required for forgiveness. Is that correct?
Yes.
Federal taxes paid by employers cannot apply to the cost included.
Yeah, you don't get to, I'd have to go back and look at it again. I haven't looked at it clearly, but payroll costs are, do not include the employer's portion of the payroll taxes. But remember, you can defer that tax.
Yes, and there is some legislation being talked about, Jeff, that actually addresses payroll taxes, correct? And possibly a stage 4 or wave 4.
Yeah, that basically, the problem with that, it doesn't have it has some support, not a lot of support. I'm not sure where it's going to go. The reality is you have to be employed you have to have a lot of employees or have employees to have that happen, and the idea right now is let's just get employees. The fact that if I forgive the 6.2% and say you don't have to pay it for the next 2 years, it doesn't do me a whole lot of good if I don't have people to take for the 6.2% that I pay. But remember, you do get, at least for those employees you have, you do get to defer that until next year. The payment of that, you get to keep that money, and they're going to have to ultimately pay it. And maybe I think that's more likely what's going to happen. At some point, they're going to say that, that hold off the 2020 payroll tax, 6.2% that you didn't have to pay in 2020, now is going to be totally forgiven. I think that's a more likely outcome, but I cannot tell you for sure. This is being debated daily, and we're on, our folks on Capitol Hill every day looking at these issues and discussing them. And nobody's predicting where this is going to go. This is a compromise. This is the issue of payroll tax forgiveness is a big item under President Trump. The Democrats look more; they'd be more interested in straight stimulus money, and so somewhere along the line they're going to compromise. In fact, the CARES Act itself is, I give Secretary of Treasury a great deal of credit for what he hammered out with the Democrats in the House back in April in March to get the initial CARES Act done. It was very, very well done. Now again, a lot of rushed through so fast. There's a lot of little silly things about it that nobody thought through. A lot of unintended consequences. The fact that they got this much done that fast is quite remarkable.
Yeah, compromise, a word not often heard in Washington D.C. these days. So that's good. Dennis Howell asks, is the time frame for PPP loan usage either 8 weeks or 24 or any time in between as soon as you've used the money?
I think you can do it as soon as you use the money. It's up to, I think it says up to 24 weeks.
Okay, all right.
So you get to figure that out. So again, just play the game. Once you know you have 100% forgiveness based upon what you used it for, and you think you can meet your FTE and salary requirements, that's the day I would move for it.
Jeff, I'm not sure I understand this question from Terry Murphy, but it's probably at a higher financial level than I am. He says, is it true that an owner is limited to an 8/52 cap based on 2019 income?
852. Yeah, that's what we talked about before.
So 8 out of 52.
And I don't think that's true any longer, but there's been some controversy about it. The answer is that you were restricted to you had to take the $100,000, you divided it by 52, and then you multiplied it by 8. And that's the total amount you could get, which is about $15,500. Okay? But that's for 8 weeks. Now that you're 24, I think you get to take that $100,000, you get to divide it by 52, which is the number of weeks, and multiply it now by 24. And that's your new cap, which should be around 15, probably about $46,000. I'm doing this math awfully fast in my head.
We need to rely on Steve over there.
But I think he would have to do the side of calculator too.
That's good. Okay. Brad Singer asked, will employees' workers' comp payments be forgiven?
No, workers' comp is not part of what's forgiven, is payable as a cost.
Okay.
Unless it is part of the state program where you pay into the state program. It may be there, but I've not looked at that issue before. But generally, your insurance premiums are not. Unless they're for health care, they're generally not deductible as part of these expenses. They're a deductible expense in your taxes, but not for the use of the PPP loan.
Okay, and guys, I'm going to try to get us all over to one channel, so I'm going to finish the rest of the chat questions, and then I'm going to go back to the Q&A questions. So don't think I've forgotten you over there, but if you have future questions, put them in the Q&A box if you don't mind. So the next question is, if we can't use all the funds in the 8 weeks, can we apply for forgiveness in 9 weeks or wait for the 24 weeks to apply? Can they wait till the end of the 24 weeks or whenever they...
Yeah, I would, again, the way I read the statute at the moment, it says up to 24 weeks.
So whenever you run out of the funds, wherever it is in between that 8 to 24 week period.
A little more complicated. Whenever you run out of the funds and you can meet the other criteria, that includes, so let's say you ran out of the funds today, okay? But you haven't met the 60% threshold. If you can continue to pay over the next 4 weeks to meet the 60% pay threshold, I would do that. But always look for that and the employee, and then your salary, 25% within normal salaries and your full-time employee equivalents. Make sure those comply as well. So it's actually a matter of calculating it constantly to figure out when's the best time to ask for forgiveness.
Good. And Andreas, I wish this question was as easy to answer as your question is. He says, we have a PPP loan for $15,000. What will be the amount of forgiveness? There's a lot of different things that figure into that, correct?
Absolutely. The amount of forgiveness is going to be done this way. The first thing you're going to do is figure out how much of that loan was paid on payroll. So the first thing they'll do is calculate how much your payroll was, and then they'll take and compare that to the amount of the loan. And if it's under 60%, then that will reduce your loan forgiveness amount. If it's at 6% or higher, then you're safe on that point. The next thing they're going to do, and it's $15,000, it sounds more like pretty close to a solo practitioner, within 24 weeks, actually within 2 weeks, or within a short period of time, you'll be able to pay yourself and 100% of that loan, and 100% will be forgiven. However, if you're not a solo practitioner, you also have to then look at the full-time employee equivalents and 25% of within 20% of the salaries, et cetera, that we talked about earlier. So on a $15,000 PPP loan, in my opinion, is that you're probably not going to owe anything back, because it's probably over 24 weeks, you'll pay it all just on payroll alone. And that sounds more likely you have a single employer, not yourself. You're a sole proprietor, because $15,000 is probably about a $70,000 a year average salary.
Okay. And the last question I have over in the chat box is from a dear friend of mine named Anthony West. And Anthony asked, our bank is telling us they have no idea when or if they're going to get new forms. I'm assuming he's asking you about forgiveness forms, Jeff, on this, but I'm not really sure. Should we wait and see or go ahead with the old ones?
Repeat that again. I didn't quite catch it.
Our bank is telling us that they have no idea when or if they're going to get new forms. Should we wait and see or go ahead with the old ones?
The old forms are not applicable anymore because they use a 75% rule. They don't make as many adjustments to the full-time employee equivalents, and they use the June 30th date. So the answer is that you have 10 months to apply for the loan forgiveness. And whether you apply for that now or whether you apply for it 10 months from now, you can still use the 8-week period if that's the best period for you.
Okay. All right. I'm back over to the Q&A side again. If you
got on chat, I have a lot more questions on my chat than you may have.
I have no more on chat. I think we've answered all the ones I had on chat. Look and see if they haven't already been answered, Jeff.
No, nope, they've not been answered. I have five answered on chat. Oh, excuse me, I was on the wrong one. I'm sorry.
Yeah, I've got a bunch more on Q&A, so that's where I want to head to now. I think.
Okay. I may have made a mistake.
And if we find there's more in chat, I'll go back and look at that while you're answering. But I want to make sure we hit these because I'm showing about 18 more questions on the Q&A side.
That's what I too.
So Andy asked, when I applied for my PPP, I had not received my EIDL grant of $10,000. But after I applied, I did receive my grant. So my amount of PPP did not include the grant. Do I still have to pay back the grant through the PPP?
You don't have to pay the grant back through the PPP. What happens is that when you figure out the amount of deduction you get for the PPP loan, $10,000 of that is not forgiven.
That's right. It's taken away.
You end up being part of you end up having a PPP loan itself. It sounds like you got that loan, so you have 2 years unless you negotiate with your bank to pay off that loan. Your payments will start upon the amount determined to be forgiven, and that amount will be or 10 months, whichever is the latter.
Okay, this question, if you kept everyone at their original pay and some are over the $100,000 allowance and you paid them from the PPP loan at their original base, can or does anything have to be done to adjust prior to asking for loan forgiveness?
No. If I read the question correctly, the answer is you paid everybody at their original base, although you capped all of the employees, yourself included, at the 100K line. Remember, when they do looking at salaries, that's capped at the 100K line. So you've paid every employee at their old pay. You kept the same number of employees as you had as of these prior periods. So you can get 100%. You should be able, and assuming 60% of that loan was used for payroll costs, and the other 40% was used for the acceptable costs, utilities, rent, mortgage interest, business loan interest, you're going to get 100% forgiven.
Okay. I think this one's fairly easy, Jeff. Brett is asking, I want to take the 8-week option. If I do that, what percentage of payroll applies, 75 or 60? And you've already said it can be anywhere as at a minimum of 60, right?
Yep, 60% applies. Part of the law applied retroactively, some of the law did not. So the fact that you now have a 5-year term, you do a 5-year term, it only applied prospectively to new loans. But the 60% applies back to all loans.
Okay. Wendy asked, I think we've answered this, can the time period be 10 weeks or 12 weeks or just 8 or 24? We've already had that on the chat side. It can be anywhere in between.
My understanding is you grab it when you've completed your loan. You can do it at any time. You can wait to the end of the 24 weeks to get the extra, if you have money left over and you can't utilize it. But again, if you have the extra 24 weeks, but if you're done in 12 weeks and you meet all the other criteria, and particularly for those of you who have brought people back on to meet the full-time employee equivalents, you're going to have to start letting some of those people go. And there's a bunch of people doing that. I know that. Whether there are members, but I've talked to other small businesses that had done that. They brought them back on to get 100% forgiven, and now they're going to have to start letting those people go. Do it now because your 8-week as a full-time employee equivalent is going to match.
Yeah.
And you might as well grab it now because it's not clear it's going to get better. We have a significant market change going on. And again, as I asked Steve, one of the questions has always been how much of that is a recession, which we saw coming in December. If you looked at financial indicators. It looked like we were going to have some adjustment in December. You could see the market being a little volatile in December, January, and February. And then all of a sudden this thing hit. And that's when you saw the market die. So that part of the market is a suppression market. We suppressed the market. Question is how much of that is coming back? I don't think the full suppression market is going to ever come back either. So, I mean, there's going to be a lot of things going on over the next year. And so the answer is, if you can meet the criteria now, grab it now and get done with it.
Here's a good question, Jeff, and I think we've answered this in previous webinars that we've had, but are our 1099 subcontractors allowed for forgiveness? They're used to do our installations versus W-2 employees. Our loan was based on including them with verification of how much they received. Our lender had us include their 1099 for verification to receive the money. That's a little concerning, isn't it?
Yeah, the lender made a mistake. 1099 employees are specifically excluded.
Yeah, there was some confusion about that, I remember at the beginning, Jeff, but they clarified it.
They clarified it early on, right away, because when you read it, the statute was written poorly, as we said, and these were rushed through. Again, a very good statute with a lot of little innuendos in it. And so initially people thought you could use it, but then you couldn't. So you're going to have to deal with your bank on this, but, you know, by the way, they made the mistake.
Yeah.
And so you're going to have to go back to the bank and figure that out, what you can do. The good news is that you have 24 weeks now to pay your current employees to get to the level you want, and you might be able to get away with it that way. I don't know.
Yeah, true. How do the wage changes work for hourly employees? The hourly rate is the same, but they're working less hours. So I'm assuming it will count as a wage reduction. Is that correct?
It actually, the rule says wages and salaries. Salaries don't change. Salaries are fixed. If you work 2 days a week, you get the same. If you're an exempt employee, generally, if you're exempt, particularly if you're exempt and don't get overtime, whether you work 2 days a week or you work 7 days a week, you get the same amount of money. So salaries are generally set. Some salaries where you do pay overtime, you get to deduct from that. So the question, those are a little more complicated, but the wages, as it said, the wages. And so to me, you could argue that's an hourly wage. The problem is that you then have to, with the new 24 weeks, you might be able to get away with both. The problem is they're not full-time employees if they're not working full-time. And that's how they figured out they would catch you on this. Because if you're paying for 2 days a week, well, they don't count as an FTE, a full-time employee equivalent. You know, they would take 2 days a week. It would take 2.5 of those people to create one employee. So that's where they get you on that. But generally, it's the wage, not the or the salary level. Salary's a little more complicated because salaries are not based upon hours worked as a rule.
Okay. Dave asked, we are a C Corp. We have 3 stockholders who are employees. On Schedule A, do we list their wages on line 9 as owner employees, or do we include that in table 1 or 2 in the worksheet since they're employees of the corporation?
I'm going to tell you now, Dave, this is the most confusing question I've ever seen, okay? Because you notice it says employee owners get listed in tables 1 or 2, as opposed, and you put them back on the schedule. You don't put them on, I think it's on, maybe on, it's not on line, maybe on line 11. I have to go back and look at the form. I don't remember it off the top of my head, but it's very confusing. It makes a lot of sense for those that are LLCs because they're paid differently and they're not considered employees, they're considered self-employed. But if you're a C corporation, you are an employee. And that's where the confusion ended up in my mind on this thing. So my answer to that is that the new form should clarify some of that. We've asked for some clarification on that, whether you'll get it or not. But I think you're going to have to separate them out. All 3 of you will have your wages eventually included in it. But if you're a C corporation paying taxes that way, you still have to separate it if you're owner employees.
All right. And Jeff, just a quick break to let you know that we are past our allotted time, but that's okay. We're going to hang on with you and answer your questions. All the questions that are listed. If you have additional questions, I can't tell you that we'll get them in today, but we will certainly respond to them via written response on our website, again, WFCA.org. But just want to let the rest of you know, if you're going to hang on with us, that we will try to answer the questions that are currently in the chute here for us. This one, Pixie is asking for just a clarification on terminology. She says, is an EIDL loan and an EIDL advance, are those the same thing?
No. There's a normal EIDL loan. We call emergency injury disaster loans. normal. We've had them for years. You can get them after a hurricane, you can get them after a flood. They're just regular loans. Small businesses have always given out if you qualify as a small business under their criteria. The CARES Act expanded them to take away a lot of the mandates. Generally, you need to get an EIDL loan, you have to show there was no available other loan sources for you to get the money you needed. They waived all of that. But in the process of creating this pandemic loan system, they gave an automatic up to $10,000 advance that would never had to be paid back. It was a $10,000 grant. So if you have a normal EIDL loan, that's just a standardized loan. If you had one of these other loans, you got it without going through the same criteria. If you didn't get the advance, then you just have a loan for whatever period of time you negotiated that loan for. I hope that's clear, because they're using the same name for different things.
Yeah, that is confusing. Jeff, when can you apply for forgiveness? Is it any point between 8 and 24 weeks, or when does the forgiveness application process begin?
It begins anywhere from, you can begin at any time at 8 to 24 weeks. In fact, I'm going to tell most of you, you ought to start telling your bank, if you haven't already, understanding what you have to document in order to get the forgiveness. So you should be working with your bank now. But the reality is, until the new form comes out, I don't think which should be out within a week. You should immediately get that form and start filling it out so you're ready to do this. But you have to file it within 10 days at the end of what they call the covered period. And the covered period now is either the 8 weeks or the 24 weeks, or any time. I would argue in between that.
Yeah, and that new form is supposed to be simpler and easier, right, Jeff?
I sure hope so. Again, I wish we could see everybody's face on here and we could sit there and say, all those who think there's that form is crystal clear and easy to follow, raise your hand. And I think we'd see nobody with their hand in the air.
Yeah. Leslie asked, are union benefits paid by the employer forgiven? Because they cannot pay union employees without paying union benefits.
No, they're not.
So they have to be separated out.
They have to be separated out. That's not part of the employee's pay. It's part of your contribution. And I agree with you that there are some things in this grouping. In fact, by the way, we tried to get initially the whole 75% rule thrown out, saying that you've looked at this to try to preserve jobs. And you did this by saying you have to keep paying people. And we said you should have done this to try to preserve businesses who can ultimately provide those jobs. The unions came in and we ended up them pushing them. They want the 75% rule. And as a compromise, they said 60%. So you're not going to get that part of it. I wish you could. We've argued for that. We've argued for other things. For example, if you pay rent, you pay a CAT on that rent. And that includes, sidewalk maintenance, window washing, whatever else is included in taxes, etc. But if you own the building, you don't get to include those trash collection costs and such. You only get the interest on your mortgage. So we've argued that it's a little unfair, where some rents fold that all in, some separate them out. It creates this confusion on it, or what should be included. And we thought all types of general maintenance costs should be included that are regular, like trash collection, property taxes, etc., which are generally included some form or the other in the rent anyway. That is all forgivable.
Alfred asked, I know we've answered this, but just to make sure that we're correct and everybody understands, do subcontractors count as my total for payroll paid?
If you pay that person and issue them a 1099, they're not included.
Okay. Linda asked, what costs are included in the transportation costs that are allowed under utilities?
My belief is car rentals, truck rentals, gas and such that you pay for as a business. Any costs you incur are included. It's odd is they never defined what transportation costs were for the general loan, but when they talked about it for sole proprietors, they talked about lease payments for vehicles. So we've interpreted that to mean that, if you're a sole proprietor and you lease, if you're, and have a truck that you lease and you get to deduct that, so should any business be allowed to. So I believe all those costs should be included.
Okay, Gary asked, speaking of sole proprietors, does the new rule allow for PPP forgiveness for remuneration to sole proprietors who are not considered on payroll?
No, they're not. Remember, your independent contractors can get their own loans that are forgivable as well.
Yeah, and you should encourage them to do so.
Yeah, there's $90 billion left, which is, in all honesty, sounds like a lot. But remember, we started out with what? Two total together is over $700 billion. So, we're down to about 10% of this darn money being left, about 12% of this money being left as of June 1. I don't know how much has been spent since then, but we're probably down to 10%. Tell your folks to get the loans.
Okay. What is the position from the Small Business Administration or lender on using funds from PPP loan for paying sales commissions?
You're allowed to pay them. Sales commissions are included.
Okay. Good. And our dear friend Janice Howe says, is there a calculator for full-time employees? Should it be calculated week by week and averaged, or over the use period, 8 weeks, 10, or 24? How should you calculate full-time employees?
My position on that is that you should be able to calculate that by looking at the full period. How many employees did I have during the full time? And I divide it by either 8 or 10 or 24, whatever that number is. That tells you full-time employee equivalents. If you look at the form, it's a little more complicated the way they do it. They make you list them and they make you list dates of them. But over the overall, I don't see any adjustment. If they're really just trying to figure out how many you had and when you had them. And they're going to do the calculation themselves on that form. I think the new form will be a little easier to do, but if you actually look at the form, you're supposed to list the people and then you tell when they were working, and they're going to take those numbers and then they're going to add them up and divide by 8 and see if the average of that weekly compares to the other numbers you listed. But remember, you can also look at just the number of employees you had as of the end of your, as of June 30th or December 31st as well.
Jeff Lisa asks, is payroll forgiven at the salary gross amount or the salary net amount? She read in the initial rules and regulations, item G, what is expressly excluded from the definition of payroll costs says EE and ER share of FICA, and income taxes required to be withheld from employees.
I'd have to go back and look at it. I haven't looked at that in a long time. I don't want to give an answer, but my recollection is that it's gross salary. You don't get to, the employer's share of FICA is not included, but the employee's share should be.
Hey, Jeff, do you think that answer may already be out there?
You're still paying that. Remember, your share of the FICA you're allowed to defer, but the employee that's deducted from the salary anyway. You're going to automatically deduct it. So I believe it should be included, but I'd have to go back and check it. I'm sorry, I just don't have it in front of me right now.
Hey, Jeff,
and it is complicated. I have to go through about 5 different rule regulations on to figure that out.
Jeff, do you think that might already be answered out there on the website somewhere?
It's probably already answered out there, but if not, I can get an answer for you as well.
Okay. All right. Terry asked if we have people
who asked a question, could they just send me a little email? It's at Jeff W. That's JEFFW at jkingesq.com. Send me the question there and I'll answer it for you clearly. Okay.
Great. Thanks, Jeff. Terry asked if we have PPP loan of $65,400 and we're short around $4,400 on meeting the payroll percentage at the 60% level for the 8-week period, is it correct that we can bonus that $4,400 amount and make it meet the salary requirement?
Yes, you can. You can also just spend another week or two and instead of 8 weeks, spend 10 weeks and be done then as well.
Yeah, unless there's a concern you wouldn't have the same number of full-time employees.
That's exactly right. So, I mean, again, that's why there's no single answer. All of these stuff has to be balanced.
Bruce asked if I had a cash reserve and have gone through most of it, can I qualify for a PPP loan?
The answer is yes. In fact, I'm not sure you're required to go through your entire cash reserve. The answer is that you have to look at this as a long-term picture. I had people, for example, they came to me and they had about $1 million in line of credit. So they calculated based upon their current projections that they would lose, they would be able to pay the employees off that line of credit up until about October or November. And after that, they'd have to lay everybody off. We said, well, in that circumstances, apply for the PPP loan because you don't have sufficient cash reserves to take you through the year. Well, it sounds like you don't either, Maria. And so to me, Maria, you should apply for the PPP loan now.
Okay. Mary asked, in regard to maintaining the salary level, is it an average over the whole period, the 8 to 24 weeks, or is it what the FTE level and pay level by the end of the period? Example, if there was no work for the first 2 months because they were closed, forced closed, then for the final 4 months, will I need to give raises to get the monthly average to meet the same pay level?
No, it's a yes and no. So you had 4 weeks that you didn't. Remember, you got your loan based upon 2.5 times your payroll costs. Okay, that's the first thing you got. You took your total payroll costs from the prior year. You divided it by 12, and then you multiplied it by 2.5, and that gave you the loan amount. So if you extend that, and that should have been spent over 8 weeks, with about 75% going to just pure math, about 75% going to the employee pays. Based upon that calculation, that's how they came up with the 75% rule. Well, now you have extra weeks to do it. So the answer is you can use the additional time to meet the payroll costs if you need to. At the full-time employee equivalents, however, that will be judged upon either the average during the amount of time you used the loan or the amount of employees you had as of, if you use the 8 weeks, June 30th, if you use 24 weeks or a longer period, then you're going to do December 31. So if you didn't have anybody for the first 4 weeks, it's okay because you now have an extra 16 weeks to make up that 4 weeks lost salary to them.
Jeff, this is kind of a follow-up to a previous question, but the earlier question asked if employees were kept and paid at their base salary that are over the $100,000 limit, what can or needs to be done prior to filing for forgiveness, especially now that the term has been extended from 8 to 24 weeks?
The answer is that if you look at the forgiveness form, and this will probably not change a whole lot, the amount of, when they look at your salaries, you have to separate all your salaries who made $100,000 or more. You have to separate them out from when you do it. And they're on a separate part of your loan forgiveness form. And anybody who made over 100,000, they're going to cap it at 100,000. So if you paid them at their old level, say of 150,000 a year, they're going to let you count 100,000 for that time, the average of 100,000, which again is I'd have to go back and look for sure. I'm just checking something out to see if I may have the actual number written down here somewhere here. Let me just check something. For $100,000, for somebody paid over $100,000, the most you can pay every 4 weeks is $7,692. And I think it's 32 cents if I'm correct. And that's, so anybody, if you were paying them $10,000 a month, you would only be allowed to count towards that 60%, the $7,692 for it. So you may have maintained your salary, but again, anybody paid $100,000, everybody is capped at $100,000. So anything paid over that does not count towards the 60% or to the loan forgiveness amount.
Jeff, Janice asked, if I had a full-time employee on staff February 15th, but she resigned due to childcare issues that were not COVID related, effective March 3rd, does she still count?
No, not if you can't bring her back. And you haven't tried to bring her back or tried to fill her with a different person. Now may not have tried because you don't have the business or some other reason.
It doesn't matter. If she resigned, doesn't matter.
No, it'd be better she'd resigned before February 15th, then she wouldn't even include it in that count. But the reality is that, but technically she's included in salary numbers. So that's why they didn't think it was a trouble. So you expanded 24 weeks. And that's why they've loosened the rules. So look at, have you tried to replace her? Do you need to replace her? Document everything why you've not done that, and you'll be better off.
Leslie was the one who asked the question about union benefits being forgiven. Could you answer that again? She said, did you answer if union benefits are forgiven?
No, they're not. They only allow payroll costs, which they define as basically salary, commissions, et cetera, et cetera. Insurance payment, health insurance payments, vacation pay, sick pay if you pay it. I'm doing this off the top of my head, so I apologize. any contributions to retirement programs, those are all considered part of your payroll costs. Union is not considered part of that.
Okay.
And nor is the employees portion of FICA.
Okay. Suzette asked, our business is LLC that files as an S Corp. So we're members of the LLC and employees of the S Corp. We both get a W-2 each year.
Mhm.
So 100% of our payroll paid wages are forgivable as part of the payroll expenses. Is that correct?
Again, I have to go through this, but the answer is if you're an LLC choosing to file as an S corporation, then you do get W-2 when you're a normal employee. Unfortunately, in the forgiveness, this is what gets so confusing about. We asked this a little earlier. They're still going to make you separate out your payments. So let me just make some, make up some numbers for you. So you each paid yourself $1 million last year. Let's make that assumption. You paid yourself a salary of $100,000 and $900,000 in dividends. The dividends don't count, but the $100,000 in salary does. So they're going to look at your W-2 form. It's the only portion of it that's going to be considered payroll costs. Everything else is going to be considered a dividend, and that's not part of the loan forgiveness amount.
Okay. Mike Martin is asking, are you sure about having to apply for forgiveness within 10 days of the covered period? He said that he was pretty sure he read it was a longer period of time you had to
It's
apply.
10 months.
10 months. That's what I thought. 10 months, not 10 days. Okay.
Sorry if I misspoke. I thought I'd said 10 months.
Jill asked, did you state that the trash payment can be included?
The answer is no at this point. We can't see that being included, but we've argued to Congress that, and we're doing this at the SBA, how are they going to deal with rent? Because rent often covers all these common costs.
Correct.
Are they going to require you to separate out your CAD? There's nothing in there saying you separate your CAD costs, which are the taxes and such. So if I'm getting to include it in my rent payment, why can't I get to include it if I own the building?
Yeah.
And so we're looking at that as well. Some of you, this will not be a problem because you own the building as a separate corporation and you charge your business rent, and that rent is deductible.
Okay. Pixie asked, again, related to that, did you say property taxes are considered part of rent and can be considered an expense that can be forgiven?
It only says rent, and it depends on how you define rent, but arguably rent for many businesses has a CAD element to it, an additional overcharge. Some of them don't even separate it out. Some just say it. Most of them separate it out because it's adjusted annually. So you pay your rent, you have your 5% increase, and you pay whatever the CAD costs are based upon last year's payments, as allocated to each business within the build, the mall or wherever you are, shopping center. So those things is that to me, I would, at this point, if I'm paying rent and that's part of my rent that I'm paying each month, I'd include it. Because you don't pay that separately. Most of you pay a single rent check. If you do and you don't separate out the CAD costs, I would just pay the rent and use the whole thing at this point. Yeah. Which would, by the way, generally includes garbage pickup, maintenance, parking lot maintenance, generally includes taxes, property, all that's included. It's why we think it's a little unfair for people who own their facility not to have as many of these deductions.
Yeah, true. Tom asked, contemporary worker payments be included in the forgiveness loan?
If they're considered employees, part-time employees, they can.
Even though they're temporary?
Even though they're temporary. But if you're paying a third party for them and you're not putting them on payroll, in other words, you're just, Kelly girls, the old days I used to use, or Stelling and Stelling employment, you paid them and the other people, they were not your employees, then you probably can't include them.
Okay. Jill asked, she says they received the loan mid-payroll period, 1 week, April 20th. Does that mean that the first week of my next payroll would be at the end of my 8-week period?
No, you get to pick up I want to make sure you all know you have 24 weeks, but according to the SBA, it starts the day you get your loan, or if it's within a week, the next payroll period. So let's say you got the loan on a Thursday, and that's, and your next payroll period started on a Wednesday, then you get to go to the Wednesday or even to that Thursday. But you get, so long as it's within, I think it's a week or maybe 2 weeks. I think it's a week. You get to, if it's less than 2 weeks exactly is what I think it is, then you get to go to your actual payroll period. So technically you could have 9.5 weeks or 20, 25 and a half weeks.
Jeff, I don't know who Anonymous is, but they've asked some great questions. And here's one for clarification. It says you answered the question about union fringes saying that they cannot be included as payroll cost and therefore cannot be included in what the PPP covers. Is that all fringes? What about the fringe funds paid into health and welfare and pension plans, since health coverage and retirement plans for employees can be included?
Nope, I didn't say, all I said, we talked about union. We actually said you generally don't include a lot of other costs. You don't get to include if some people pay spa benefits. Some people pay gym memberships for wellness programs. Those are not included. What is included is you get to any healthcare insurance, any retirement fund payments. All of those are included. But other payments are not. They're very strict and really deeply detail what's included in these costs.
Jeff, how would you define full-time employee?
40 hours a week.
Isn't that open? And as long as it's 40 hours a week, that's a minimum of 40 hours a week?
Yeah, generally the way they do it is they look at, so when they look at part-timers, they look at part-timers, and by the way, it's 40 hours paid a week. I don't think it's 40 hours worked a week.
Okay.
But if we have many people, and actually I think it's 30 hours a week. But when you add them up, you look to do 40 hours. But anybody over 30 hours, I think, is considered a full-time employee. And it's not based upon this law. It's based upon a law that they make reference to. So I'd have to go back and look at the other law. But my belief is it's 30 hours a week equals a full-time employee. But when you take part-time employees, you add them up until they reach 40. And I know that seems inconsistent, but that's my recollection of it. But again, I don't remember off the top of my head because these are 3 different statutes. You have to go back, because they make reference to the laws, what a full-time employee means.
All right, Jeff, the next 2 questions are somewhat related. The first one says, from an earlier question, if union benefits have already been paid from the PPP loans funding, what can be done to adjust for forgiveness at this point?
Nothing. You're not actually weren't allowed to use the funds for that.
Yeah.
Technically. So there's really nothing you can do. The only good news you can do is that, don't take your loan after the end of 8 weeks. Take it to the 20, take it an extra week, and that'll make up the difference, or 2 weeks, make up the difference. You still get to your 60% and you're done.
Yeah. This one's somewhat related. If you discover that you paid on some items that are not allowed and are depleting your PP loan funded sooner than what you would have been, now that it's extended to 24 weeks, is there a way to put back the funds to cover for the longer 24-week period that's now allowed?
Technically, no. But I don't think anybody's going to come audit you for it either. So the answer is that if you made a mistake, fine, just put the funds back.
Yeah.
The easiest way to put the funds back is just recognize that, whoops, I paid, $10,000 on things I shouldn't have been paying for. So I'm just, when I continue through the extended time, I'm just going to continue to pay and then take it out of my own pocket to pay those extra 10 grand to get it back to where it should be. I don't think you actually physically have to take the money and put it back in the bank. Many of you, however, have, at our suggestion, in order to track this well, the initial 8 weeks was so strict that we had suggested that you set up a separate account. In that circumstance, you may want to put some of that money back in. So you show it, whether you put it back in immediately or you put it back in over time, but you show that those payments continue to come out of that.
All right, Mary says that we have a total of 4 employees. 2 are installers used on a job-by-job basis. During the period timeframes, neither of them were paid. So even though they are employees, they're not paid during the base period. So we only count the other 2 employees who were paid during the base period in the FTE count. Is that correct?
Yes. Now, I want to make sure I understand this. What you're looking at is full-time employees based upon the average number of full-time employees you had, either, and it's your choice, you had between February 15th to June 30th of 2019, or the amount of full-time employee equivalents you had between January 1st and February 29th, 2020. That's the first number you look at. And so then you look at the average you did over this 8 to 24 week period, and you compare the 2. Assuming you could have brought people back and you didn't. If you offered them jobs and they didn't want to come back and you couldn't find anybody else to do the work, which is common in this industry, because if they were say they were an installer, you know, they had to have a forklift license. It's not that easy to grab those people off the street. So that may mean, or you needed certain experiences, you couldn't do it. That's fine. Figure all that out. The second thing is, remember, if you do ultimately bring them back and you have the same number as of December 31st of the end of this year, then that too counts towards it. So all you have to do is say, how many did I have on February 15th versus how many I have when I applied for my loan forgiveness that I had on December 31st. In fact, you'll notice that I had this question all the time on the loan application. I don't mean to interrupt myself, but when you did the forgiveness loan, people said, why do they count how many employees I had on the 30th of June? That's one of the questions on the loan application, forgiveness application. I said, because if it's the same number you had as of February 15th, then that's considered to satisfy, it's a safe harbor to consider you satisfied the FTE requirements, salary requirements.
Okay. So do we have to choose or tell our bank how many weeks we want to consider for the PPP loan, or can we just consider any number between 8 and 24 weeks?
I think it'd be better to talk to your bank about it. I don't want the bank to, the bank, you already have a signed agreement with the bank, and you don't want to make sure you're not doing anything incorrectly on it. So always go to the bank and talk to them about it if you're going to extend the period, just as a matter of courtesy to them. You really get in trouble when you keep communications open.
Jeff, good question on 401k, and this is the last question I have. Our retirement 401k employer match is paid one time at the end of the year. The match is accrued with each payroll. Can we include retirement 401k expense because it is incurred but not paid?
Yes.
Okay.
So long as you pay it by the next normal pay cycle. Now, I don't know what that means. Because the next normal pay cycle for you is the end of the year for this amount. So technically you could make that argument. You may want to consider paying it in earlier. But the problem is you're not going to have all those employees at the end of the year. And you'd have to talk to your 401k administrator, because as you know, some of this money you can pay in and some of it invest immediately, some of it doesn't. There's all sorts of issues with it that you need to deal with. And those are far beyond my ability to answer because I don't know what your program looks like. And even if I did, I'm not sure I could answer some of those technical questions on a 401k.
Yeah, true. All right, Jeff, thank you. I know you asked Steve a question, but I'm going to ask Steve to hang on to that question because I think it's good enough for our next Zoom conference call that we should look at the recession versus suppression and how that. So, Steve, if you're okay, we'll save that question and respond to that on the next one that we do, which will probably be next Thursday.
Sure, be glad to.
For everyone else, thank you for hanging on. I saw that quite a few of you hung on till the end. We thank you. Hope you got all your questions answered. If you have additional questions, please reach out to the WFCA. And again, please utilize our website, WFCA.org, where you will find many of those questions answered for you. One more thing, Jeff, I see just came up. Clarification says we've established a separate account for the PPP loan funds to make payments from. Will the forgiveness form reflect what was allowed? And if you exceeded the funded amount, is that a point when you can put funds back in? We really don't know what the new form is going to look like, do we?
No, we don't know what the new form is going to look like, although we have some general idea of what's going to be asked. Because the old form, some of those questions are going to continue to be asked.
So do you think the new form will allow them to, at that point, put funds back in to equal things out?
Yeah, I don't think they're going to ask that question. I think they're going to ask, the question is going to ask is, how much did you pay on payroll? And you have to list the employees. How many employees did you have on this date, that date? They're going to ask all the questions that require you to determine the amount of forgiveness of it and how you use that money. To the extent that it adds up to show 100% of the loan was used properly and met all the ratio criteria, you're going to have it forgiven. And the fact that you put money back in, again, I think unlikely to be audited, but if you made a mistake, you made a mistake. Nobody's going to be is going to find themselves in trouble for having made a mistake that they then took reasonable time to correct.
All right, guys, thank you very much, Jeff. Steve, thank you for hanging on till the end and answering all these questions. And again, please check out our website, WFCA.org, and look out for the communication for our next Zoom conference call, which will probably take place next Thursday at 2 o'clock. Have a great rest of the weekend, great rest of the week, and a great weekend. Talk to you soon.